Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over some more information. I posted some of this stuff on Twitter as well. If you want to follow me on Twitter, it's at finding_finance. You can see it right here. So it's at finding_finance. And I retweet and I also post stuff on here if you want to follow me on Twitter. A lot of good information. Hopefully all of this information that people are posting is accurate. I have my doubts on some of these things, but for the most part, I do think a lot of it is accurate, and I do get a little bit of information from it, more from an entertainment perspective than an information perspective. If you were to look at what I basically look at when I invest, it's basically ratio driven. And that's where the value is. I do lots of long-term, big picture charting is what I like to do. I sit in stocks for years. I don't sit in them for weeks or months. So I know that the time frame can be a little bit different for some people because they think that, a trader doesn't want to sit in stocks. Traders, they feel uncomfortable owning things. That is what a trader, they feel uncomfortable owning nothing. That's what they want to do. They don't want to own anything, and when they're in a position, they get uncomfortable owning that position. I'm the opposite. I get uncomfortable if I'm not in positions. That's an investor type mentality or mindset. I am afraid to not be in it, not to be in it, if that makes sense. But there's some information I'd like to go over. I shared some information on the housing market. I'm not necessarily buying these stocks. I'm mainly energy and precious metals driven for the most part. That's the majority of my portfolio. I mean, I have a little bit in shipping, a little bit in some other stuff, energy service companies and stuff like that, which is more energy companies. But I'm very much overweight energy, very much overweight precious metals, and I don't own too much outside in terms of large percentages. And when I talk about precious metals, I own a lot of physical metals. I do the ratio trading back and forth over long periods of time. And I've made a lot of money doing that. It's not dependent on inflation or deflation. All it cares about is ratios. And when the ratios fluctuate against each other and you swap back and forth between metals, you earn more, you get in return more metals. So you might have, I'm just going to make this up, 50 ounces of silver to begin with. You swap back and forth and you end up with 100 ounces. That swapping doesn't matter about deflation, inflation. You're increasing your number of ounces in your ownership. That's what real wealth is to increase those ounces. And it's usually tied to the purchasing power of other things. So silver or gold or whatever does not get created at a speed that mass-produced items do. So usually they hold their value against those things that are being mass-produced. So your buying power of those goes up, and if your number of ounces go up, so your buying power per ounce goes up, and then your number of ounces go up, which means your buying power gets increased, irrespective of inflation or deflation. But anyway, we'll jump in here. I'll talk about some of the information that I'm looking at. So looking on here, I posted this. It says real estate, Lennar Corp doing a massive retest, perhaps. Toll Brothers retest as well, question mark. And what this is a big long-term view of Lennar Corp. Lennar Corp is a home builder. And the home builders are, they broke out and they've done a retest. And if you were to zoom in on it, you can see this guy's pulling on back. I could probably drag this thing out, but it's breaking to the upside. It basically pulled back, did a retest to its breakout, and now we're pulling on higher. Is this a retest? Are we going to go higher? I'm not going to sit here and say I'm 100% sure, but perhaps all these guys in the housing market, maybe they have it wrong. Maybe the Fed's going to pivot. Maybe interest rates go down and we get another leg higher in real estate. It looks to me that people are positioning in homes, almost as if they know that the Fed's going to position and drive rates lower again. This one is Toll Brothers. That's another company that builds homes. A nice large consolidation period that's broken out and now is doing a retest. Now, again, I'm not buying these. I'm very energy and precious metals focused. I do own a few home builders, but it's not the majority of my portfolio. I'm just looking at this to gain information on what potentially could be coming. And if the home builders are setting up to potentially go higher, maybe people are looking at things incorrectly when it comes to the real estate market. I also posted this XHB home builder stocks ETF and a few home builder stocks on trend lines, lumber finding a bottom. So I click on this. This is the XHB. This is the home builders ETF. We've broken out. We're starting to do a retest, and maybe we can find our footing here and head higher in the home builders. And I know everyone's very bearish on real estate right now. If you look at Twitter, everyone is bearish, 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 and almost all those people are usually wrong. I'm not saying that I'm right. I'm just saying, maybe we can find our footing here. Maybe not. We'll find out. This is MTH, Meritage Homes Corporation. This one's also broken out, and it's finding doing a retest move. I just find it curious or weird that all of these home builders have broken out, and they're doing retests at this time. We also have a shortage of homes. So we'll see what happens next with interest rates. And I do think that interest rates do have an impact on where this is all going. Here's Cavco Industries, another home builder that is doing a retest on its upward trend line. And then we've got lumber here. Lumber's been heading higher. I thought if we were in a real estate bubble, why would lumber be going higher? Wouldn't we be in an overbuilt scenario where homes are not being built and that we're just crashing? Why are all of these companies retesting trend lines, and they're not even broken their trend lines? They're all still in upward movements. So I'm not saying that they can't go back down, but what I'm saying is perhaps everyone else has it wrong. Maybe they do, maybe they don't. We'll find out, and I'm going to continue to monitor it. But remember, that is the home building, I should say the housing starts, is integral to where we are in the thesis. My thesis isn't that home prices are going higher. My thesis is that housing starts, the volume of loans against the housing starts, is inflationary. And that's what we're looking for. The thesis is right, irrespective of if home prices go up or down. What we're trying to gauge is where we are in the cycle. If we're in an expansionary phase and we're going higher, that means that we are going upward in your loaning volume. It's imperative to know exactly where you are in the cycle. And right now, I'm not saying that this cycle is necessarily done yet. If we fall and break below all this, then yeah, but these are doing large, big picture view of these big patterns. They've broken to the upside, and now they're doing a retest. If those start to go higher again, I have a feeling that a lot of these other people have it wrong. That energy is going to go a lot higher than what you think. That's where I'm positioned, is very heavily in energy in general, and energy service stocks and uranium and all that. This one I thought was kind of funny. It says, no one will remember your salary, your fancy title, how busy you were, how stressed you were, how many hours you worked. People will remember how hot your wife is. I just thought that was funny. So coming on down, myocarditis cases in USA ages 12 to 20. They're skyrocketing in 2021, right when those shots came out. Kind of interesting, huh? Grady posted, this is the blue breakdown. This chart is pretty clear. In my experience, clean and to the point charting usually works best. It's reached its price objective for the purple head and shoulders pattern, plus has a huge bullish reversal candles. So if you look, we've broken on down, and we could potentially come on up and do a retest of this breakout, and then I think a move lower. So what does that mean? It means that we could see yields go down, and this all kind of correlates with each other. We could see home prices get a bounce here, or a little bit more stabilization with lower interest rates. Interest rates could go down for a little bit, which is basically a retest of bond prices going up, retest, and then we head lower again. So we could have a pullback in commodities, a pullback in the Treasury yields, a rise of a retest for bond prices, and then it all goes in motion again, however long this takes. Maybe it takes 6 months or a year, something on the lines of that. And maybe it doesn't do that. But I mean, that's just something I'm looking for. It says we're witnessing the destruction of an advanced civilization due to green ideology and poor judgment. Germany's energy policy may permanently collapse the aluminum, glass, fertilizer, and chemical industries in Germany. And that's some things that he was talking about the cost of energy and how they could permanently collapse those sectors or industries. One chart that Uselink, I had him on the channel. It says gold will surpass many, in my opinion. Not me, though. Gold outperformed inflation by almost 500% in 4 years in 1970. And we've got this inverted head and shoulder, so shoulder, head, shoulder. And we've got this inflation period, deflation period, and inflation period, or disinflation, however you want to call it. This is more or less just the exact charting of the percent population growth. We had a percent population growth do this exact thing, a large bear market. Now we're heading higher. So more or less, it's just the demographic. And the demographic coming into home buying years. That is what this is. And I think that eventually we'll probably see gold take off at some point. This is integral to energy, having an energy crisis, and the energy crisis will manifest itself in higher consumer price index. That will be seen by people, and that higher consumer price index will cause money to rotate, in my opinion. This is good morning from Germany, which is falling as an economic powerhouse on a global scale. Germany's trade surplus is gone. Foreign trade balance came in at minus 1 billion in May, which is the first negative print since 91 due to its energy problems and weakness in manufacturing. There's the chart going negative for the first time in a very long time. Well, good luck with their renewables. Global nuclear capacity needs to double to meet the net zero goals. That's global nuclear capacity. And I think that we're going to have to position more so in nuclear and gain more of our energy from nuclear. Because we have to. That's the last kind of high energy returning source. And if we have problems in oil, if we have problems in natural gas, if we are hitting peak oil, we are going to adopt nuclear in a way that people will be completely and utterly surprised. I think, some of these small modular reactors could do absolutely incredible things in reducing the cost of producing nuclear, standardizing how you build something. I mean, that's basically exactly how I would build it, and I'm in manufacturing. So that's the way I would design it. People are borrowing against their houses at the fastest pace since the 2008-2009 housing crash. That is the bubble back here. We're starting to come back up and borrow against it. We'll see how long this lasts. It could last for a long time. Historically, once we started going into this, 85 to about 92, 7 years. We went positive in about 99 to 08. So that's about 9 years. If we were starting in 2021, add 9 years, you're at like 2030. So 7, 8, 9 years, 2028, 2029, 2030. That's basically in line with what I think we could potentially do for a bull market in commodities. Here's another one I posted. We aren't replacing our oil reserves. Total global recoverable oil reserves are falling at an alarming rate. According to Rystad Energy Analysis, global recoverable oil now totals an estimated 1,572 billion barrels. So our global recoverable oil reserves fell by 152 billion barrels compared to 2021. The drop in reserves is driven by the 30 billion barrels of oil produced last year, plus a significant reduction in undiscovered resources. So our total recoverable oil is declining. Then you look at the renewable side. It says the mining industry warns energy transition isn't sustainable. There's a glaring problem in the energy transition that not many people are acknowledging. It is being built on the back of finite resources, and the mining industry is already warning that there aren't enough metals for all the batteries the transition will require. Because of the short supply, prices are on the rise, as are prices across commodity sectors. So we've got declining oil recoverable reserves. And at the same time, what we're transitioning to, the mining industry saying, hey, look, this isn't sustainable. This here is your energy crisis. This is the crisis. This is what I am seeing, and I'm positioning in this stuff because I don't think this can come. I don't think we can have renewables come in the way that we think we can. So I'm positioning in the energy service companies because they're the ones that are going to have the solutions to our problems, hopefully. And I think we're going to have to drastically increase our drilling. And if that is the case, and you guys want to know what I'm investing in, definitely subscribe below to the Platinum membership to see which companies I think are going to do very well over the next decade. Coming on here, it says, still want to buy an EV? Here's Tesla's charging line in California. This massive line waiting to be charged. And they're just all filled up. It's got a huge line, and I don't know. I wouldn't want to be in that. Yeah, we've got this. As long as the ratios are low, I buy it and I ride it. That's literally my motto here. Missing dramatically lowered guidance for an overvalued company should not get a bounce. Tesla will likely have negative cash flow this quarter. And that's the problem with increasing commodity costs and scarcity of commodities and metals and increasing energy. A lot of these companies that are renewable or electric vehicles, they're very subject to the price swings in commodities. So I've basically avoided all of them. And here's Josh Young. OPEC oil output, again, misses target in June as outages weigh. OPEC output falls 100,000 barrels from May. Libya, Nigeria post biggest declines. Compliance with OPEC Plus cut pledges rises to 253%. So these guys are missing their outputs. We're probably at peak oil. Things can get real messy here going forward. And I'm not, I'm sticking with my energy long, energy service companies, oil and gas exploration, production, uranium, and all the companies that are going to help solve the energy crisis problems. If we try to go to renewables, shipping is going to get tight because they're going to have to ship all these minerals. So I've positioned to solve, in companies that are going to solve the crisis. Forum Energy Metals intersects mineralization from its winter diamond drill program. So that's good for Forum Energy Metals. It says, wow, Buffett just bought another 10 million shares of Oxy at 59 and 60, increasing the price from his previous 55-ish range. Warren getting real on energy now. And I think he's seeing probably what we see, or what I see at least. Energy's got a problem. And he's piling in. He is piling in like he's never bought before. Biden to greedy oil companies, drill more oil, but not there or over there either. So Biden plans to block new offshore oil drilling in Atlantic Pacific. I don't think that'll necessarily impact our offshore drilling companies that I'm in, but if I don't know where this energy is going to come from, guys. It's going to get real hairy coming up. Almost like they're trying to increase the oil price up to like $500 a barrel or something, or 300 or whatever, some ridiculous amount. Here's Uselink, still a valid count. What this is, it's the URA ETF versus the XLE. URA is uranium. XLE is the oil exploration and production companies. And it looks to me like uranium's ready to try to really take off here. I'm very bullish on uranium, very bullish. And we'll see what happens coming up. I am positioned in both of these, and I've been buying more so in the uranium recently than oil and gas. But yeah, we'll see. We'll see what happens, and I'm very interested to see what uranium does. Someone said, Alistair McLeod, and I posted this back to back. He said bank credit is contracting faster than ever since the 1970s. This is his credit that he's put on there. And then I've got another guy who's got evidence that the bank credit of all commercial banks is actually increasing at some of the fastest pace that it's ever. So this is right from bank credit off of Fed Reserve, Fred. And this is, I don't know where he got this from. This is also Fred. So interesting to see that you've got two things directly opposing each other. So I don't know who to believe on that, but I wanted to put that. This is another one for small modular reactors. A nice little clip here. And I agree with that. Small modular reactors. Actually, nothing has changed in uranium. I think we're bottoming out. URNM's also putting in basically this accumulation cylinder where we could eventually move higher. This is Jesse Livermore's accumulation cylinder before a gigantic run that comes. I do think this is probably going to come at some point. We are positioned very well right now. We've got bullish engulfings on the short term. Everything looks aligned to take a run at it. We'll see what happens there. Do you think we see XLE beating QQQ over a longer time horizon than year to date at some point soon? Basically, he's seeing that energy could potentially beat out the technology stocks and companies. And again, we may get a pullback before that happens. You know, I'm not here to say that it can't pull back. Inventories are really low. We're doing the strategic petroleum reserves. Maybe we have a couple months of a pullback before we do another, before we engage launch mode. So I'll just say that. Here's S&P 500 sector weighting in year to date. Energy is outperforming year to date 32%, and it's outperforming everything else. And I'll end it there, guys. It's getting kind of long, but that's what I've got for today. Just wanted to share some information on what I'm seeing. The charts do agree with everything that I'm showing here too. But and again, guys, if you like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website, Platinum membership below. If you're interested and you want to gain my opinion and how I'm playing things, it's all on the website. I did a question and answer session. The video's posted up for those that are members. And if you want to become a Platinum member, you can see all my previous videos that we've done for question and answers and how I'm positioning in all these different companies. All right, guys, we'll catch you next time. This is Finding Value.